This strategy that I'm going to be teaching you in this video is so simple and so effective that if used properly, you can make money in the markets every single day from this video on forward. And this strategy is called shift of structure. And for me personally, I use it in every single one of my trades, and it makes me anywhere from $50,000 to $100,000 per trade that I take using my shift of structure. And these numbers that you're seeing right here, this is by simply applying what I'm going to teach you in this video starting now. So you're probably wondering, what does shift of structure mean? Well, it's pretty simple because it's literally what it means. It's a shift of structure in the market. So the market, when it is going in an uptrend, it consists of structure. Every single high point and every single low point, that is considered a structure point. All of these random points in the chart where price has a rejection and then it just fluctuates up and down, each and every single one of those elbows or triangles, those are points of structure. This is where the market is giving you the indication that we are now in a bullish trend, or if we are in a bearish trend, obviously if we're heading to the downside. So what is the shift of structure? Well, it's literally when there's a shift of structure, when you can see that these elbows to the upside are no longer going to the upside. Now they have shifted and started going to the downside. Same thing as if you're in a bearish market and then you see the shift of structure shifting now to the upside. It's when the structure completely changes direction in the market. And you're probably wondering, when does this happen, right? So this pattern happens in two different scenarios. The first scenario is, let's say if the market is heading to the upside, meaning that you are having a bullish structure and it's been going on for a long time. The market starts to slow down. That's where you can then see a shift of structure, and you can see the market have a reversal and shift structure to the downside. So that's the first one. The second one is when market hits a very strong resistance level, and then you have the shift of structure that now makes price reverse. Obviously, same thing vice versa, to then if the market is heading to the downside. The market has been heading to the downside for a very long time, and it starts to slow down. That's where you can then see a shift of structure, and the market can now start heading to the upside. Or if we hit a very strong support level, and at that support level the market rejects from it, shift to structure, and now we're heading to the upside. So this might seem a little bit confusing without the market, so let's actually get into the markets right now. Let me explain to you and let me show you what a shift to structure looks like, right? But before we get into there, keep in mind that the shift to structure happens across all time frames: 15-minute, 30-minute, 1 hour, 4 hour, daily, weekly. The shift to structure happens on every single time frame. But rule of thumb is that the higher the time frame, the more the shift to structure is going to be respected. When you have a shift to structure on the daily, it's obviously going to have a bigger impact on the market versus if there's a shift to structure on the 15-minute. So that's a rule of thumb and something to keep in note. So now you can see in this chart right here, there's a lot of different patterns. There's a lot of things going on in this market right here. First things first, you can see how this market was then headed to the downside at one point, and then at another point, it then headed to the upside. And at this heading to the upside, then it headed to the downside again. And then from this downside move, then it headed to the upside. And then after heading to the upside, then it headed to the downside. Every single one of these legs of it moving up and down, there's a complete shift of structure. The market literally goes from bearish to bullish, from bullish to bearish, about 3-4 times in this whole entire move. And it's actually very easy to understand once you get to see it. But before actually showing the candlesticks, I'm going to show you in a line chart what it consists of, which is much better and effective. As you guys can tell, this is a bearish market. A bearish market consists of lower highs and lower lows. These were the elbows that I was talking to you about, or the triangles. This is what is considered a structure point in the market. This is what it looks like on a line chart, and this is what it looks like on a bar chart. So every single one of these elbows or triangles, this right here is market structure. This is a market structure point. This is a market structure point. All of these are simple market structure points where price is going to use it to have a rejection from, to then head to the upside or head to the downside. And based off of these structure points is where we can see if the market shifts to the upside or shifts to the downside. Again, might be information overload, but now I'm going to get into a little bit more detail so you guys have an idea and understand what I'm explaining. So you guys can see right here that this is a bearish market because this is a lower high and a lower low, lower high, lower low, lower high, lower low. So to make it very clear, to mark it off, every single time you want to see clear a shift to structure, simply mark it off. So this right here would be your lower high, and then this point down here would be your lower low. So every single time you have a lower high and a lower low, literally it is impossible for there to be a shift of structure without the market actually shifting the structure. If price breaks above this lower high, this is what is considered a shift of structure. If price makes it to this point right here, this as of right now is not a shift of structure. This market is still currently bearish because there is still a lower high and a lower low. If this market right here then does this, then this would be a new lower low. And then this last point would become the last lower high. And the market continues to head to the downside like this. When the market does something like this, this is not the lower high because the market has not created a lower low. It is impossible for you to have a lower high without a lower low. Rule of thumb. This cannot be a lower high because then where would the lower low be? There's no lower low. The lower low would have to be the new lowest low point in the chart. It's very self-explanatory. So as of right now, all of this has been continuous bearish momentum in the market. There's no shift of structure. Now, this right here, once again, is absolutely nothing. It's just a structure point in the market. There's no shift of structure. A shift of structure is when you literally shift this structure point right here. The market can do this, and this is still not a lower high because there is no lower low. Again, it is impossible to have a lower high without a lower low. And this right here is not a higher low because we haven't shifted the market structure. So this right here is simply just structure within the bearish trend. Same thing if this does this right here. Again, this is not a shift of structure because a shift of structure is only when we body close above this structure point right here. Now, the moment we do body close above this line, now this time frame has shifted to bullish. This is now a shift of structure. So this bearish structure in this market has now shifted bullish. So this right here would then become the higher high. And then this down here would then become the higher low. The higher low is literally the last higher low. So now this market is in a bullish market structure. The same thing applies as the downtrend. Whenever you create a new higher high, the higher low follows. It's very simple. And again, the moment we body close under this move, this is now bearish. This would now be another shift of structure. But if the market has a pullback to about right here, as of right now, this is still bullish because we still haven't body closed under this structure point. So we're still bullish. So we continue the trend going to the upside. Even if we do something like this, this is not a higher high because we haven't created a high above the last high. So it's impossible for it to be a higher high. It literally hasn't gone higher above than that last high. But if we do have a higher high, then the new highest high becomes the higher low. And then you simply follow the last structure point and then boom, this becomes the last higher low. This right here is still nothing. The moment we create above, this is now the higher high. And then this is the higher low. Now, the moment we body close under this higher low structure point, we are now bearish. This market has now shifted to the downside. So this becomes the lower low. And then the last point, which is the last lowest high point, becomes the lower high. Again, remember, you cannot have a lower low without a lower high. And you cannot have a higher low without a higher high. It's literally impossible. So now this market right here, let's say it does this and it body closes above this. Well, now we're bullish again because we have just broken above this lower high structure point. So this time frame right now has become bullish and this is now the new highest high point. And exactly how I just said it, it's impossible to have a higher high without a higher low. So this right here would be a higher low point. And now this market can now continue heading to the upside. And then this would become a higher high. It's impossible to have a higher high without a higher low. So if this is the new higher high, there has to be a new higher low. It always changes when you have a new higher high. So again, the moment this body closes under, this is now bearish. And then this becomes now the lower low. And then this over here becomes the lower high. So this, what you guys have just seen in front of you, is a shift of structure. By you being able to see the shift of structure, you can predict what is going to happen next, because the shift of structure usually happens first on the lower time frames, indicating to you what's going to happen on the higher time frames. So this right here is a perfect example of what is the shift of structure. So now I'm going to show you what it looks like on the actual candlestick patterns, so you guys can see exactly what I'm explaining to you. You can almost predict what is going to happen next because of the patterns that it gives you. So now we're going to move the same exact shift of structure that we just did on the line chart, but to the actual candlesticks that it's what we trade. And you can almost see that the pattern that I have done right here is the same exact pattern as what we have done right here. If I simply just zoom out the chart a little bit, and what I do is I'm just gonna grab this, sphere, put it here. You guys can see it's basically this move right here to the downside. If I grab this sphere right here and I put it up here, you guys can see it's that move. If I grab this sphere right here, and then I grab it and I put it here, you guys can see how it's literally going to be the same exact move. So it's going to be very simple and very effective. So this right here is going to be simple. This is now bearish. Why is it bearish? Well, let me show you guys. You guys can see how we start off the lower high point up here. This is a lower high, lower low, lower high, and then lower low. So what we're going to do is we're going to get our trusty lower high line, and then we're going to get our trusty lower low line. This way we know what is a lower high and what is a lower low. So once we have a lower low, the market then does this pullback and we body close under. This immediately turns into the new lower low. So this right here is the lower low, we body close under, and now we take it all the way to the last point, which will be right here. So this is now the last lower high, which would be this point right here. And then you follow this up, and then where it turns, this then turns into the lower high. So this would be the lower high, this would be the lower low. So now again, price could have came all the way back up into here and then done this, and we could have still been bearish. But what we did is that we body closed under that line. So now this becomes the lower low, and then this becomes the lower high, this structure point right here. We pulled up all the way up to that lower high point. We never body closed above. So cool. Now that doesn't mean that anything happened. The market is still bearish. But then we body closed under. So now this is the new lower low. And then this point right here becomes a lower high. Again, you just follow this little move. Boom. As soon as it turns, this becomes now the lower high. But what tends to happen here? The market, instead of coming back up to the lower high point and then heading to the downside, it shifted the structure. You can see how it now has broken above this lower high point right here, and then it has now shifted it. So now what happens? This becomes the higher high. Let me just move this text to the left so you guys can see it. So now this becomes the higher high point. And then what's the higher low? You follow the little line, and then boom, this is the higher low point right here. It is literally the same example that I just gave you guys right here. It's the same exact thing. We have a lower low market, and then we body close above. This is now the bullish move. It is literally the same exact move. So now this is where the market has shifted to bullish. So this is the higher high, and now this body right here has turned into the higher low. The moment we body close above this line, this now becomes the new higher high. So this is now the higher high. And then now this right here is the higher low. Let's make this to the right as well. So it's to the left, so it's easier to spot. So now this is the higher low. If you notice here, we never body close under. These wicks don't mean anything because they're just wicks, they're not bodies. We are only looking for the bodies to close above or close under. So it's a confirmation of a shift of structure. So as you can see right here, no body close above or under. Then right here, boom, it closes above. So we chase it all the way into price stops, which it stops right here. So this is the higher high. We follow it down to where then it has the rejection. And now this is the higher low. So now you're seeing how this market has shifted from bearish to now bullish. So you could have entered the trade right here beautifully once it broke and retested this shift of structure. This is how you could have used the shift of structure to enter the trade, because you can see how now we've come into a strong level of support and we have shifted the structure So this is your indication to you like, okay, this bearish move to the downside has completely stopped. So now we have a shift of structure, we have rejection from an area of interest, we have bullish engulfing candlestick. This is a good high probability trade to take. If you don't know what a strong support area is or what a bullish engulfing candlestick is, make sure you watch these videos up here because it explains those things into great detail in order so you understand how to implement the shift of structure with a strong support and all these things so you create a profitable trading plan so you have an edge over the market. So we can continue this going literally all day because the market, all it does is create market structure every single day. So now that we have this higher high point, body candlestick closes above, you can see right here how then this is the higher high, we follow it down, this would then turn into the higher low. And then as you can tell, this took quite a while to then break above, which is actually very fast. Break above, you see that little minor line of the body that it closed above, that counts. So that is now the higher high. You follow it down, this is where it then shifts. So this is now the higher low point right here. We body candlestick close under. So now this is bearish. So this turns into the lower low. And then this over here turns into the lower high. And you can literally see how now from that shift of structure right there, how you could have predicted this huge lower high bearish move to the downside. You add that in there with a beautiful head and shoulders pattern, which again, if you don't know what a head and shoulders pattern is in, just click this video right here. It explains to you perfectly what that is and how I use it with my trading plan every single day. So you can see how the shift of structure happens right in front of your face, and you can literally see what's going to happen in the next move as soon as you have a shift of structure. And we can continue going this forever. Like, I'm not even kidding, the market does structure all the time. So now here you can see how we have a new lower low point, and then this is a lower high point right here. And I'm going to show you how you could actually enter a trade with shift of structure just right in front of your face. So once you have a lower low point, we then have a new lower low. So this becomes a lower low point right here. And then the lower high point becomes the last lower high point, which is this one. So this is now the lower high. And then as soon as we get a body candlestick closure above, what do we have? A shift of structure. So now that you have a shift of structure, this is your indication that, okay, now we are ready to be interested in taking this trade. And this is where we would then wait for a higher low, and then we would wait for our bullish engulfing candlestick, which is this pattern right here. So literally because of the shift of structure, this would have given us a strong indication to take this trade. So we would have our entry point right here. Our stop loss always goes under the last higher low because we want to make sure we have enough space just in case if this decides to pull back right to that point, create a double bottom and then head to the upside. Because even if it creates a double bottom, it doesn't shift to the downside. Because if it closes under this line, remember, we are now bearish, so the trade was completely wrong. You're taking this trade because the market is going to reverse. So you want to have your stop loss right under the zone that if it does hit it, your trade was completely wrong and it wasn't just a simple wick out. Because if you have your stop loss right around here, price can still have a little bit deeper of a pullback, create a deeper higher low, and then head to the upside. Nobody wants to get stopped out because of a wick out. So you want to make sure you have your stop loss with enough breathing room. So if it decides to have a deeper higher low, you're still good. So you would have entered this trade literally right at that bullish engulfing candlestick, and you would have had an easy 1 to 2 trade, still right at the resistance level without any stress, zero drawdown, and simply using set and forget. It is literally that simple. And this example right here is the same exact example as we did right here. And it could have been the same exact example that we could have done for a sell right here. As soon as you see the shift of structure, wait for the lower high or the higher low, wait for the engulfing candlestick, and you're pretty much golden, not gonna lie. And I kid you not, I use this pattern every single day in the markets with my personal trades. And when I get on a call every single week with my students, that is what I imply to them every single week, that they have to take a trade with a shift of structure. That's how my students are making anywhere from $1,000 to $1,500 a week using my set and forget strategy, because they're using my trading plan along with addition to the shift of structure at the area of interest with my set and forget strategy that lets them make anywhere from $1,000 to $1,500 a week as a beginner set and forget trader. If you're probably wondering what is set and forget and you want to know more about it, just click the link in the description below. I have a video there for you that is going to explain everything about set and forget and how it's making traders make anywhere from $1,000 to $1,500 a week as a beginner set and forget trader. Just click the link in the description below so you guys can see what is set and forget about and what does it even mean and how I can incorporate it with my trading plan and the structure. So I hope you guys found this video useful, and I'll see you guys in the next video.